This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look at the gold market briefly. So guys, despite on the yesterday's really fast action to the upside, it's currently not much to do on the gold market because this fast action to the upside has increased significantly the risk of the possible upward continuation. Although the chances for appearing of the reverse head and shoulders pattern is still here. That's why currently, as you will see on the lower time frame charts, you'll see that market in fact stands at some break-even point, because despite this action up, the possibility of moving to the 1220 area is still possible, still exists. And depending on how market will behave in this area on the lower time frame charts, we will get the information, get the signal what to expect. So if market will pass through it and return right back up to these previous highs, it will suggest this possible upward continuation and acceleration to the upside. While if market will fail here, that will put the market on the same course with this reverse pattern, this reverse head and shoulders, with the possible move to the upside, to the downside. But in general, the fundamental part of the foundation on the gold market suggests that investors now stands in some risk aversion, because if you take a look at the markets across the board, you will see the changing sentiment to the stock market, with increasing the interest to the safe haven currencies as the Japanese yen, Swiss franc. Also, the managers of the gold ETF funds report on the increasing inflow in the gold funds, the inflow that they hadn't seen since the August of the previous year. And many investors, many analysts already start to speak about that the role of the gold market as the safe haven asset is rebounding, especially when they stand at really low levels, even compared to the cost of the mining of the gold market. The spread between the gold miner stocks to the gold market stands at the minimums, and that that makes in general investment in the gold market attractive. With the changing situation on the stock market, when the Federal Reserve has started to tapering and in fact significantly has reduced the basis, the external liquidity that makes the stock market growth. And we said that it's really the stock market is a bubble, and this is just a bubble where the external liquidity were put by the big banks and so on. It's now when this external liquidity start to fade, market has now feels the lack of the source that fuels the market, that makes market grow. And that's why the falling of the stock markets across the board, the not very stable situation with the fundamental data on the United States economy, on the Chinese economy, makes investors search the possibility to protect their profits, protect their assets until the situation will be resolved and will not become clear. That's why the demand for the safe haven assets now rebounded, and you can see this on the gold market. And despite how it will happen, whether it will be the head and shoulders or something of that sort, but from the fundamental point of view, the chances of the appreciation of the gold market now really has increased significantly. And now the gold market starts to get some really this fundamental support that it hasn't previously. That's really very important sign, very important moment right now. So on the daily time frame chart, speaking about pure technical moments, so what do we see? First of all, we see this upward action that's not quite logical in the current situation, especially when you expect the move right to the 1220 area. And by this action, market has moved above the monthly pivot point. So you can see that during the February, market holds above the monthly pivot point. It has moved above the weekly pivot point. That's the bullish sign. And in general, take a look that currently trend holds bearish, but price action stands to the upside. That really could be the bullish dynamic pressure. If this will really true, the market should take out of these highs, and maybe it will form some sort of the butterfly here or something of that sort in the short-term perspective. I can't exclude this. But prior to speak about this, let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, you see the core of the current tricky moment. So that, as we noted on the previous week, this trend line will be very significant for us. So as market has accelerated right to this area, we said that it probably should show, after respect to this support, it should show downward continuation, because here we have got this really fast acceleration. The CD leg is much faster than AB. With this retracement, this was normal. Market has retested this trend line and turned to the downside again. That is absolutely normal market mechanics. So if market really would like to continue move down, it should do this with this. It should done this with this move to the downside that has started right here. But instead of that, market has bounced up again and again has approaching to this trend line. That is not normal. This is true extended retracement to the upside. Recall what we have said in our weekly research, that market should stick perfectly if market will stand inside of this most recent swing, because respect of this support there already has happened by this retracement. Any other significant retracement to the upside will not stand in a row with normal bearish development, and that is the warning sign. And now market has reached this trend line again, so keep an eye on this development. So if market really will move above this area, that will tell us that market will take out of these highs and continue move high. But until market stands below it, the chances still exist to the downward action. Yes, this is a bit too extended retracement, especially when we see this acceleration, but still chances here exist that market could reach this area. So currently market stands at some break-even point, at some edge. So if it will pass through this trend line, be ready for the upward continuation. If it will hold there and start move to the downside, well, the chances will exist that market will continue move lower, but better, if you still would like to take the short position, better to do this when the market will take out of these lows, because any bounce to the downside could not necessarily mean that market will continue move right here. That could be the butterfly. As we have discussed on the daily time frame, market could show some minor bounce and then turn to the upside again. That's, you can see, a very tricky moment on the gold market. We know that market now becomes stronger and stronger. It now has have got the fundamental support, but we do not have yet the clear pattern that could trigger the reversal. So initially market has started with head and shoulders but can't complete it. And what to expect, whether market will still show the bottom of the right shoulder so that we could take the short could take the long position, or market will just break out to the upside and continue move to the upside. Currently it's very difficult to suggest, but the first sign to possess yourself for the upward continuation if market will return right back up above this trend line. That will be clear the bullish sign here. So let's see what will happen. But currently, guys, I am not very fascinated with the trading gold market, because it looks very nervous and different flows, different forces now impact. It now stands between the two opposite fronts. From the one side point of view, this unstable situation on the stock market, the changing sentiment of the investors push market to the upside. But from the other point of view, those who thought that gold market is bearish, it's too early to speak about the reversal here, press on the market from the opposite side and increase the volatility and could lead market to really doom and gloom in the nearest future, especially at the eve of the debt sale discussion in the Congress, since on the 7th of February it's coming the next debt sale in the United States. So it's a bit risky, guys, right now, and I prefer to see some more clearer pattern, some more confidence with trading gold market before taking any position.